Where can you find a company's financial information? In this video, I introduce the main reports that public firms file, explain what a 10K and 10Q are, and show you how to navigate the SEC's database of filings. So if you want to look up a firm's financial information, where are you going to go? You could go directly to the firm's website, and then you would have to navigate to their investment relations sections and try to find the financial reports that you're looking for. And that is an okay approach, but there's going to be inconsistencies. Firms are going to differ how easy or difficult it is to actually navigate their website. They're going to differ in the layout. There's going to be some variety in terms of the order of the reports and how they show the reports, and even which reports they actually include on the investment relations section. There's also going to be a difference in terms of the history. Can you go back through prior years and find the financial information that you're looking for? So I don't recommend that. The better way is to go directly to the regulators. In the United States, it's the Securities and Exchange Commission, the SEC, and if you go to their website, you're going to be able to find all of the reports in a predictable format and in the predictable order that you expect. In terms of the backgrounds, all of the public firms in the United States, those that have their equity or debt trading on major public exchanges in the US, must file their financial report with the SEC. And the SEC makes those reports very quickly available to the general public through their database called EDGAR, Electronic Data Gathering and Retrieval. Okay, so the direct link is sec.gov. You can go through /search filings. But if you don't remember, if you're like, okay, I'm not sure, it's actually really, really easy to find it. So here, if I jump to a browser and in the search, I literally just put in the word EDGAR. Okay, and the very first link that actually comes up is to the SEC's database of the filings that you could search. Let's take a look at those. Okay, so I have the search filings. Now, there are several different ways to navigate this website, and in the future videos, I'm going to show you. But for now, we're going to click on the most likely that you're going to need. Let's say that you have a specific company in mind and you wanted to find their financial filings. If you go to the company search, you can look it up by a ticker symbol if you know it. CIK is a code that is an identifier unique to the SEC, so you're actually pretty unlikely to know that. But even if you have just the company name, you're going to be able to find it. Let's say I want to look up Target. So here I have the very first link is Target Corp. It tells me that the ticker symbol is TGT, and I'm going to click on that. Now, if I'm going to click on that, I see that I have their latest filings. These are literally the things that have been filed, yesterday, the day before, etc., as well as I have kind of a structured, organized way to look through certain types of filings. And again, the nice thing is even if I look up at a different company, let's say I'm going to pull up Microsoft, very different from Target, but it's going to be structured in exactly the same way. You have the latest filings and you have the organized kind of by type. So let's dig into what those types actually are. The main form that you're probably interested in, and the one that I'm going to focus very heavily in this series of videos, is going to be the Form 10K. The Form 10K is also known as the annual report because the company is required to file it once a year at the end of their fiscal year. I don't want you to conflate it with another annual report, and I'm going to show you in a second the distinction. Firms also create something called annual report to the shareholders, which I call a slightly glossier cousin to the 10K. I'm going to show you very briefly what I mean, but I will highlight that the 10K is the main repository of financial information. That's the one that's regulated. That's the one which the SEC looks at, the what SEC requires to be on file, and the one that we're able to find on the SEC's EDGAR website. So the 10K is a really, really, really good document that contains a lot of information. That's the document that I'm going to focus on heavily in explaining the financial reporting of the firms. Okay, now what else are we going to find? 10Qs. 10Qs are structured very much like a 10K. These are quarterly reports. instead of annual reports. If you have followed the news at all, you know that there's currently a discussion whether we should have interim reporting done on a quarterly basis or on a semi-annual basis. For now, and for a while now, it has been on a quarterly basis, so these reports are called 10Qs. The nice thing is once you learn a 10K, you can navigate the 10Qs just as easily because they contain the same information, they contain the same structure, they're just smaller in scope, okay? Other reports include 8Ks. I will have a separate video in the future on 8Ks. These are really interesting reports. They're kind of flash news. They're almost like press releases. If an event happens to a firm that the stakeholders, such as investors, are likely interested in knowing, such as significant contract is signed, or there is a potential bankruptcy, or there is a change in the executives of the firm, they have to issue kind of a very timely, very short report that highlights the news. These are called 8Ks. Again, they're not comprehensive, they're kind of one-off news items. Now, there are hundreds of other reports. There's reports that have to do with mergers and other transactions. There's reports that have to do with beneficial ownership, so insider trading and kind of other specific ownerships. Again, the majority of what we're going to focus on in these videos is going to be the 10K. So let's take a look at targets. If we go to the 10K and I click here, I can see the 10Ks and 10Qs, and they're going to be in the order of the most recent one that has been filed first. So the most recent has been a 10K filed on March 11th. If I click here, it takes me to the document itself. And it is a pretty dense document. There's lots of information here, a lot of things to unpack, a lot of richness to discern. Now, to help us navigate the document, we have the table of contents. The great thing about 10Ks is, again, because they are standardized, the table of contents is going to pretty much look the same whether you're looking at Microsoft, Target, or another firm. Let me show you. If I go into the 10K of Microsoft and I scroll a little bit down and I look at the table of contents, notice that item 1 is business, item 1A is risk factors. And for Target, item 1 is business, item 1A is risk factors. Once you learn to navigate the 10K, once you look at a 10K of one company, two companies, three companies, etc., you're going to get kind of a rhythm of where things are found, how they're structured, how to navigate them, and it's going to get more and more comfortable for you to be able to take a look at them. That's kind of that's really the advantage. Now, let me go back for a second what I mentioned about the other report, the annual report to the shareholders. Here, if I go on Target's investor relations section of their website, there is a 2025 annual report. If I take a look at it, it looks a little bit different, right? There is some pictures here. There is some charts. There is a letter to the shareholders from the CEO. So kind of some summaries. Then it does get to the 10K. So in the case of Target, they actually include 10K as part of their annual report to the shareholders. You're kind of really not missing anything, but it does look a little bit different. But that is going to differ from firm to firm. Here, I picked an example of a different company called Midland. For Midland, if I go to their financial investor relations sections, I see that I have two reports here. The 10K, and this document is going to look exactly, that's the document that they filed with the SEC, so it has that same predictable content, business, risk factors, etc. But they also do have an annual report. And if I go into that annual report, what I mean by glossy is, look, it has, pretty colors, it has charts, it has pictures, but it doesn't actually have a ton of financial information. It doesn't have a ton of disclosure. It's only about 20 pages. So this is definitely not the comprehensive annual repository that you want to be looking at. In this example, if you were navigating through the investor relations group, you would have to make sure to go to the 10K. Now, again, if you're just going through the SECs, you don't need to worry about it. The annual report will be the 10K. And that has been something that has been reviewed by the SEC. So it's something that you know is kind of predictable in its format, in its structure, and in its content. I showed you that this is kind of a lengthy document. Even the table of contents is pretty long. So let's take a guess exactly how long a 10K is on average. Okay. So if I asked you to think about these 10 companies, very familiar to everybody in the US, what do you think the average length of the 10K report of these firms are? The most recent one. Is it 50 pages, 70, 100, 125, or 150? The answer is 125 pages. On average, this is a pretty lengthy document. And again, that makes it so rich. That makes it so interesting and relevant. And that's why we're going to unpack in many, many videos the information that you're going to find in the 10K. Now, is there going to be a variance across the firms? Absolutely. We have some reports which are on the shorter side, Dollar General, but then you have the Hartford, which is an insurance company. They're sitting at 225 pages. There's definitely variety. A lot of it, again, has to do with the requirements. Hartford is an insurance. They have regulatory disclosure, which the retailers do not have. So all of the insurance firms are going to have longer reports. But there's other factors as well. It's the complexity. If you have multiple business units, so H&R Block really only does one thing, so they're shorter report in terms of the scope of the company business. But you have companies that have multiple divisions, that have international as well as US businesses. They are likely to have kind of bigger information that they need to convey. Now, the 10K reports, like many other things, have experienced inflation over the years. This chart is from an academic paper that looked at the length of the reports, and this is in the number of words. But you can see that essentially from the mid-90s to today, the average report has doubled in length. And even for the companies that I have here on the slide, John Deere was 67 pages in the mid-90s. It's up to 91 now. Hartford was 100 pages in the mid-90s. It's up to 225 now. Why did the reports get longer? The main reason is we asked firms to disclose more information. Over the years, the regulators have requested more and more disclosure on topics from governance to details of supply chains to risks, etc. So over the years, we have asked them to give more information, and they have complied, and they have given more information. And that has the pros and cons. The pros is more information is, maybe always better. The cons is now we have to get more comfortable to be able to digest that information, to process it, and to get the pieces that are relevant to us. Okay. What exactly do we find in the 10K and 10Q reports? Now, if I ask people to find financial information or what is financial information, if they've had any exposure to accounting or to financial reporting, they're going to say, oh, it's the financial statements, right? It's the balance sheet and the income statement. And it is true. You have very important 4 financial statements. You have the balance sheet, the income statement, statement of cash flows, and statement of shareholders' equity. Now, each statement is about a page. So that's roughly 4 pages. So what do we have in a 10K out of 125 pages in addition to these 4 pages? Well, first of all, we have what's called the notes to the financial statements. For each item that shows up on the financial statements, you will have a discussion about that item and you have a disclosure about relevant information, maybe details, maybe breakdowns, maybe assumptions, which are important about the item. All of that is quantitative information. On top of that, you also have useful qualitative information. Now, in my videos, I will primarily focus on quantitative information because that's kind of the bread and butter of accounting. But I just want to highlight that the 10Ks have information about products, about customers, about management teams. So all of this additional qualitative information, we can think of this as giving really important color to the numbers that we're also digesting from there. Jumping back for a second to Target, the financial statements are always going to be found in item 8. So item 8 are financial statements and supplementary data. And you'll notice that it's kind of a longer item, right? It's in the case of Target, it's 30 pages because it does have these additional notes. Let's take a look. Here we have the financial statements. So you have the kind of a couple of pages here, and then we get to the notes. And as I mentioned, every item which is of significance, for example, sales. Sales are important. So now we have a discussion of sales. Same thing, we have advertising costs, we have things like inventory. A lot of the items that only get one particular number on the financial statements then get a paragraph or a page discussion in the notes in terms of all of the kind of significant events that are relevant to that item. Those are our focus, the financial statements. Now, I mentioned that there are 4 important financial statements. Why are there 4? Why can't we just say, tell me how the company is doing, and they're going to provide one statement, and that's going to be the end of it? Okay. Now, there are 4 statements because each statement is distinct in terms of the question that it answers. If your question is, what is the financial position of the firm at the end of the period, then you need to look at the balance sheet. Now, if I asked you, what is your financial position as of today? You're probably going to give me an answer. First of all, you're probably going to tell me that it's not on my business, just totally true. But you're going to give me an answer maybe, well, this is how much I have in my banking account. This is how much my house is worth. This is the amount of my debt, etc. That's going to be your financial position. Okay, same thing for the firm. The financial position are the assets that they have, the debts that they have, and it is a snapshot. It tells you what they have as of the end of the period. Now, does the balance sheet help you to understand how the firm did? Did they make sales to customers this year? Were they able to control their costs this year? No, it does not. If you're interested in how the firm actually performed during the period, the balance sheet is not going to help you there. You need to go to the income statement. The income statement is going to have information about sales, expenses, and profitability. Are they able to break even? Are they able to be profitable? Now, something that I'm going to focus on very heavily in the coming videos is the fact that the income statement does not care about cash. The income statement reflects economic transactions. So if a company made a sale to a customer, even if the customer hasn't paid yet, there's an invoice outstanding, that sale is still going to be recorded on the income statement. Income statement is all about kind of real time of events as they happen. But what if you did want to know about the cash flows of the company? You wanted to know the cash inflows and outflows and how they're structured. What are the different transactions that lead to the cash exchanges? Then you would go to the statement of cash flows. Now, last one is the statement of shareholders' equity. I'm going to punt this a little bit right now because you need to watch the next video where I introduce what equity is. And there it will be clear that the statement of equity really reflects all of the transactions that have to do with the equity of the firm. If you're even a little bit exposed to capital markets, you know that equity is essentially ownership. So primarily that statement is going to tell us about the transactions between the firms and the owners, things like raising money and repaying to investors via dividends, etc. So these are the 4 statements, and if you're careful, you will notice that the wording is a little bit different. For the balance sheet, I say the question is financial position at the end of the period, and for the other 3 statements, it reflects the events that occurred during the period. We can think of this timeline that the company is going through, and the balance sheet are, again, these are snapshots. At the end of one year, at the end of next year, at the end of next year. If we look at cash, for example, how much cash did the company have at the end of 2024? How much cash they have at the end of 2025, 2026? But that still leaves a blank in terms of how did the company get from 2024 to 2025 year ends? And this is where the other statements come in. The other statements all reflect only the events and transactions during one period, so they help us to reconcile how the balance sheet changed from last year to this year, or if we're looking at 10Qs from last quarter to this quarter. Last thing I'm going to talk about are the fiscal year ends. If we go back to Target for a second, something that you may have noticed if we go to the very front page, we see that this is for the fiscal year ended January 31st, 2026. Normally, we think of December as a year end, but for Target, it actually happens to be January 31st. Is that normal? Is that okay? Absolutely. A big chunk of firms do have December as their fiscal year end. So companies can pick any point during the year as their fiscal year end. They just need to be consistent. And again, this is for financial reporting. One of the things that I do not talk about in these videos are taxes, financial reporting only. A lot of firms do pick December 31st because that's kind of natural for them. It could be not exactly December 31st. It could be Sunday closest to December, last Sunday in December, something like that. This does represent a big population of firms in the United States, but not everyone. For the remaining 20%, the most common driver of your fiscal year end is just what industry you belong to. We saw for Target January that is actually very common for retailers in the United States. Why? Because December is crazy. December is the holiday season where your sales are very large, your inventory management is very chaotic. And really, it makes sense for them to wait until the end of January where all of the numbers are fully collected, compiled, checked from December, as well as they've dealt with things like return windows, et cetera, for a big part. And it tends to be kind of a quiet, it's a down period, not a whole lot of sales happening at that point. So it makes sense to end the year there. For the same reason, a lot of agriculture firms do a fiscal year end that kind of ties to the harvest cycle. Hardware firms, June is a big point in time for them. There's a lot of tech conferences. A lot of times the models are unveiled. So a lot of hardware firms kind of tie it to the end of June. A lot of times software firms are dealing with customers re-signing contracts for the next year in December. So January is kind of almost like for retailers. It's a little better for them. It's a little bit quieter. It's a little bit after the hassle of the busy period. Gas utilities, September. Insurance is an example of an industry which is almost all in December because it ties to their insurance regulatory filings as well. So for them, it's natural. So these are trends. These are not rules. Can you find a retailer that's not a January? Yeah, absolutely. Can you find a software that's not a January? Absolutely. But there does certainly tend to be clusters. So that just means that we need to be careful if we're looking at a 10K of a firm, and this 10K is for 2025. For some firms, that will spend January through December of 2025. And for some firms, it might be different for the purposes of comparability. We just need to pay attention in terms of what their specific fiscal period is. There we have it. This is the end of the first introductory video to the financial report. A lot more information is coming. So in the next video, I will introduce the balance sheet. In the third video, I will introduce the income statement. And in the fourth video, I will really focus on the difference between the timing of the economic events and the timing of the cash flows. So this first batch of 4 videos is the introductory one. And from then on, we will build a lot into the various specific topics of the financial reports. If you enjoyed the video, then please like, subscribe, share it with your colleagues and friends, and I'll see you in the next one.